The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. Hope things are going well for you. Let's check out where the markets are at right now. We got the S&P is currently up. Let's see, we got 0.75. We have the Russell up one whole point on the day right now. We're going to have the NASDAQ. We got the NASDAQ up 24. And we have the Dow currently down 22 pips on the day. Let me check out where we're at on copper. We got copper is basically flat on the day. It's down 0.02%. We got gold is currently up 2.4. Silver is up 0.5%. So silver is the mover among the metals right now. We got natural gas is flying. And one of those things that's awesome to trade and completely insane to trade at the same time. It's up about 2%, and that is not an abnormal day. Looking on over at oil. Oil is basically flat and unchanged, just very quiet markets. We talked about this week. It's been a very quiet week. And with the low news impacts going on, there's not a lot of news happening. Checking out corn. We got corn right now. It is down 3 points. We got soybeans. It is down 10. Euro dollar is currently down just 10 pips. Aussie dollar is down 41. Pound dollar down 53. A little movement right there in some currencies for you. Looking on over at the dollar franc. Dollar franc is currently up 11 ticks. The dollar CAD is currently up 14. Dollar yen is up 13. Aussie yen is currently down 20 pips. The euro yen is basically flat, unchanged on the day. Pound yen down 25 pips. And the euro pound is up 15 pips on the day. So let's that gets us caught up where the market is right now. That's your lunchtime market wrap. And like I said, there wasn't a whole lot of news going on this week, and I just want to make sure you are caught up on the plan. We didn't have a whole lot happening with it there. But just like I said, I want to make sure you have the latest details. And let me pull it up for you. We'll walk through it. And I'll throw up the economic calendar for you. Look at that right here. And here we go. Okay. So, today is the 24th, and we had a couple things. We had a dollar franc last night. So let me open that chart up. We'll check it out and get it up here on the screen. So let me throw that and change that on over to the dollar franc. And pretty just quiet markets. So there's still plenty to do, but you want to have different plays in your playbook. I was talking to a bunch of traders about that last night and how important it is to go in there and make sure that you have different setups, different layouts, and you can respond, to markets in different ways. So we did have we had a little nice move there on the dollar franc. It got actually pretty much got a deviation from low to high. So pretty impressive right there. So, we called it right on the money. I mean, look at that, within like a couple ticks from the low to the high of a one deviation move. That's what that red line moving up to that black line is. And it's just, I'll have deviation levels where I'll mark, what is one deviation from the previous day's settlement. But more importantly, I also like to track the low to the high because maybe it goes down half a deviation and then up half a deviation like it did today. But let's look at the news report. What happened on the news last night? Okay, so news came out at 2 o'clock, at 2 a.m., and we were looking at 11 p.m. to 7 a.m. Let's see what kind of move we got between 11 and 7. And so bring it all the way back here. All right. Take that on out to 7 a.m. About 18 pips. Okay, what do we get on our high to low? Let's check that. Or open to low there, I guess you could say. So open to low, 28. So pretty much right on the money. The trade we called out was a 30 pip trade, meaning we expected it to not move more than 30 pips, and so we're looking for a 30 pip iron condor. That's buying the lower one, selling the upper one for a $30 profit on the trade. Entering at 11 for the 7 a.m. expiration. Would have collected somewhere around, 18, or actually about 11 or 12 net pips on that trade. So not a massively profitable trade, but I mean that's what premium collection is. Just going in for a nice profit. But it has a huge wide zone for the break even. 30 pips down, 30 pips up. That's a 60 pip zone. Plus you go a whole another 30 pips up, 30 pips down for a 1-to-1. So now you got 60 up, 60. Then you have a 120 pip wide zone for a 1-to-1 potential max profit, max loss trade. And so a pretty sweet setup overall. And let me see what we got. Pushing this over here. Yep. Okay. Trying to make sure my chart was coming through correctly. And the other trade we were looking at was for this morning on the new home sales. We were checking out the euro dollar, so we go ahead and pull that one back up. We had that a second ago. Should have started there. Euro dollar sales. We're looking at the 7 a.m. to 3 p.m. or, possibly looking at maybe a 9 to 11. But 7 to 3 is the more likely trade. And let's pull that one up, look at the details, and see how it worked out. Okay, so if you got in at 7 and a 3, let's just see where we're at. Go ahead and we'll pull out the movement. We have had some movement. There's been a little bit of a down move here. Not a massive move, but nevertheless. Okay, so 7 o'clock. Right now, it's ran down how far? 36 pips. And let's see, that announcement came out today at 10 a.m. Okay. So 36 pips. We were looking at a $30 profitable trade on that one. Trade's not over yet. We have till 3 o'clock. So right now, where does it stand? It stands right about, let's see, because it's pulling back up at 26. So right now, it'd be like about $4. It'll keep going up, 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 up. And once it moves on up there, then hopefully it'll just keep rising back up to where it was right before the news, and that could be a potential max profit trade. Also, you could have entered a little bit earlier on that trade. You could have done, you could have entered at 9 a.m. for the 10 a.m. new home sales report. And let's see. So if that one, if you would have waited till 9 o'clock, and this is if you could have got the premium, pretty low implied volatility day, 9 o'clock, take that on out to 11, and 21 pips. So if you got the 30 pips on the trade, probably would have been, I doubt you would have got that, Phil. I wasn't able to look at that one at that time. But if you were, then awesome. But there's just not a lot of implied volatility in the markets right now. So, and let's look at what we got left on our calendar for the rest of the week. So we got your regular crop bulletin reports and all that coming out. Tomorrow we're going to have a weekly oil inventory report. And so we can check that out. Basically just what's the expected range on that. Let's go ahead and pull that up. See what we got. Okay. And the expected range for the release tomorrow comes out at 10:30. And I'm just going to see if I can get this right here. So the high to low expected move for Wednesday. And then for the 10 to 11 hour, we're looking at about 57 pips. Okay? So about a 57 pip range is what we're looking at on oil for the oil inventory release. And that may be up, down. That may be half up, half down. So, check and see if you can possibly pull off an iron condor. That would be, ideally profitable within that range. Even look at maybe even a strangle. You might even be doing a strangled condor. You may go in and you may put on a condor on oil, but you may go in and buy the binaries as well. So there's a lot of different ways that you can combine it together. But that just gives you an idea of what the range is. And interesting enough, the range even before that, the 9 to 10 is also, which is opening hour, it's about the same amount of movement as the average expected move on the oil inventory. It then drops from there down to 31 over the next hour. So it's a significant decrease, but we might still have a lot of implied volatility that you can take advantage of. But just keep that in mind. That's when your trend trades on oil are going to be happening. Okay. And that's, on Wednesday. And that's what I'm looking for is when does that volatility pick up on any given day? So if I was looking at today and I'm looking at the report right here of when are these releases coming out, and Tuesday, 10 to 11 is about 57 pips. That's pretty normal for about that time of day. Dropped in about 41, 37, 33, 40, even a little bit later in the day. That's sort of interesting. But really, your big moves are going to be happening right there, obviously in the morning hours. But just to see not only the volume, but the actual expected move. And it does drop down quite a bit. So 2 to 3, about 40 pips. So notice how we go from 57 down to 41. Okay, so 9 a.m. expiration, 57 pips. 10 a.m., 41 pips. 11 a.m., 37. This is for today. And then we go into 1 o'clock, 26 pips, and then it picks up. 2 o'clock, 33 pips, and then, it keeps getting bigger and bigger and bigger, and then it just drops off. Understanding that pattern will help you as a trader because you'll understand that volume is going to be higher at certain times, but also movement is going to be larger at certain times. So, how did it do today? Was it a high volume day? Was it a low volume day? What did the move look like? And let me just grab the deviations. I'm going to move that down here. We can focus on this a little bit more. I'm going to bring volume on up. Here we go. Okay, so as far as this morning, we'll cover when we get back. Where was it at on volume? Where was it at on expected range? How can you put the two together to see what kind of day it's going to be, to know what kind of trades and plays you want to make? We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. And so what we're doing is we're just checking out, we're looking at oil. And today's pretty light day on oil, and the easiest way that I can say this is by looking at what kind of volume do I expect and what kind of volume am I getting. And notice I'm not getting that much volume on the expectations. It picked up a little bit, and you'll notice where it does pick up, usually it breaks out. So we're getting very close to, like, right here, it's just starting to break out, like right there. And, but I mean, that's sort of the first time we have of a real move. We'll see if we can break below the low right over here. And so right now, like, oil's setting up for a nice potential short position right there. See that? It's at a support resistance level. It is going to have to break through that level with some volume. So if that volume can keep going, then, yeah, it could definitely move down. We can see a solid move on down about 35 pips. So, which is $350 on an oil contract, so not bad. And just needs to really be able to break down here with a little bit of oomph. And see no reason why it won't do that. And that would be a move not only down to here, but also be a move right down to the half deviation level. So every target lines up pretty well for that being a decent potential trade. But going back and just looking at, volume, and noticing, volumes under expectations, and the market really doesn't even move the expected level. The orange line being the expected level didn't really move that far. Okay, so expected volume, expected move high to low. So it comes on down, but we don't get a lot of volume, doesn't quite hit the bar. And then we do actually exceed some volume. We hit the volume. So, all in all, probably average out on the volume, and we do actually hit the expected move. One of the things you don't have to do this, but one of the things I've learned to do is I'll go in sometimes, and I'll stick this, and I'll add in expected volume, but I'll put on 60 minutes. And it's just a way to see over the course of an hour, did the market actually, hit the expectation for that hour in volume? And if so, did it hit its expected move? So like right here, we bring this on up, put them side by side. Notice this hour we did not hit the expected volume, and we did hit the expected move. On this one, we did hit expected volume. Again, we did not hit expected volume anywhere close to it. Didn't even come close to hitting the expected move. Same thing happened again. We're pushing on up this hour. Will it hit the expected volume? And we had some decent volume up front. Will we keep that decent volume or not? If we do, if it'll keep picking up, then, expect that not only we already hit the expected move, but we can easily exceed it if we can get up, to the expected volume point on this one. But we will hit, I imagine by the end of that hour, we have 30 minutes left. We have 30 minutes. It's already moved the expected move, so volume is going to catch up. So this time volume was a little bit behind. But we did have a precursor. Okay, you don't have to wait on the hour. That's why I don't always have it I rarely have it on my chart. I just look at it. Right there. There's all the minutes. I mean, there's only one 4-minute period in the last hour, current hour, where we didn't exceed expectations or even hit it. So it's not a surprise that when that happens, that we are going to go down and we're going to move the full expected move. Now the question is, can it break down below here, or is it going to be stuck right at that support level and just bounce right back up on it? So if we do get a reversal right here, if we get some nice volume increasing on the downside, then we could have a great trade. Okay, so that gives you a little wrap-up on oil. We'll have natural gas on Thursday. Tomorrow night, be very aware, we're going to have U.S. final GDP and core durable good orders. Wish I had more for you than that, but there really is no consistent impact. And, half the time the thing moves 15 pips, half the time the thing moves like 45 pips. Sometimes it'll move 55 or 60. There's just not enough either small moves or big moves for us to put on a straddle or a strangle on the trade. It's the final GDP. It's the third GDP release. This is basically the second revised. They revised it twice. It's the second revised number on that. If you're looking for a way to potentially play the oil trade, I could bring that back up real quick. Let's see what we can. Maybe we can do something there. Let's see. What do we got? Might be able to focus on a strike right down there at like 106.50. Okay, for the 2:30 expiration. So we'll dive into that at the end of this break. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, so here's an example of a very low-risk, high-profit potential trade you can do on Nadex. And, I just did this one maybe at a major support resistance level. You're looking at a very potential high breakout trade. But you don't want to, end up having to, risk a whole lot of money if that does happen. And you don't need to be right that often. I mean, if you're right 50% of the time, you clean up. So what is the trade that I just did? I put on 10 contracts. I went short the 105.50 contract on 2:30 expiration on crude oil on Nadex. My risk, $4 a contract. Not bad at all, right? Do 10 contracts, you're risking $40 on the trade. What is the prop potential on that trade? $960. So that's if it expired, okay, below 105.50. So what's my risk? $40. If just one contract gets down there, I've made $40 on just one. So I have different ways. There's a lot of different ways you can play this specific trade. So one of those would be you could go in and you can set a take profit on literally just one of them. So if I'm over here and I'm using the diagnostic scanner here, and I go in, I scroll down, I find oil, I look for the 2:30 expiration. I'm like, okay, I can get that one on right there. That's not bad. Put that trade in, and check it out. And I'm like, well, that's definitely the best contract. I mean, 105.54 right there is 96, 105.50, 96. It's like somebody just took the book out. So on my trade right here, I can go in now, and I can put in, let's say it's to buy one. I'll buy one of them back. It's not too hard to take the book out on that. I'll buy one of them back. And let's see, 96. I put 40 bucks in. So if I bought back at 56, then what would happen? I would be break even on the trade, right? If I could just get one of my contracts filled at $56. Pretty simple trade. If just one, and then the other ones are now free to make all the additional profit. I could layer out of those. I could watch it. I'll watch it as it gets closer to 2:30. But that's just like, hey, if it gets down there and break even, what I'm really trying to do is make a lot. And again, if just one of them works now and then you make a lot. Let's just say, 3 out of 10 actually get to your price point. Well, you're making a huge profit. Let's say that 2 out of 10, in addition to that, actually get there but go back. Well, you're break even on those. So if you start doing the math, it adds up very nicely. And I'm talking about basically having a 30% like massive win ratio. Okay, like that's not exactly, fantastic, wow, accomplishment there. And sometimes somebody places a wrong trade, and somebody filled my order. That's awesome. Thank you. Anyway, so somebody I think actually accidentally just sold the 56, which means they filled mine. Don't know why they did that, but thank you. And okay, so let me do the math for you, show you how this works, and we'll put it together. Okay. Right over here, and just want to open this up. Just go through. I just want to show you the power of the math on this. It's obviously just a really low risk trade. It's not a whole lot to it, but just want you to understand. Why would you even consider this? Often you hear me talking about in the money binaries. Why would I even look at? Let's go right over here. And what we're going to see, okay, so if I went in and I risked $4 on 10 contracts, all right, so we'll make this a little dollar filled here. Get rid of this. All right, so so I have an order, just in case you missed that, I entered at 96. I have an order to get out at 56, 57. One of them already got filled on that. So, and right here, $40. All right. So risk per contract. And then we got contracts, total risk, and we'll put total reward. Okay. And so my reward is going to be equals that times 100 minus that, so $960. So let's say you are able to be 3 out of 10 times you can actually pull this off. You're only right 30% of the time where it actually expires. And then, we'll subtract, I guess it wouldn't really be, what would it be? You wouldn't really lose 40, you'd just have taken off the risk instead of making the full 50. So basically we'll pull $50 out of the trade on each one because we closed one of them early. Okay? So right there, that's 3 trades. And then we're going to go in, and let's say on 2 of them, you basically break even. Okay? So you get out of one of them enough to cover the profit on the others. And then let's say that on the remaining ones, what is that right there? It gives us how many? 6. So the remaining ones we lose, let's just say we lose 40. Okay? Then what is our basically growth, not including fees? We can even add in fees. So $24.90, but what about the fees? Okay, so equals it's basically going to be $9 a side, so it's going to be $18. I'm just going to do it easily. And then this one we had $9 on the entry, and we had one more that we closed early. So $9.90. And these we left on, and they all expired. Okay, so we'll add all that up and multiply it times -1. All right, so that'd be a net profit if 30% of your trades were profitable. 2 of them, like meaning they hit the profit target, they expired in the money. 2 of them, out of all of them, were break even. And then the other 5 just flat out washed. Massive profit. And, I mean, you could actually, we could make it like, lose one, like 1 out of 10 could actually still come out and be ahead. Okay? So, what's the issue? Well, one is, yeah, you could potentially pull this off. Here's the other issue. You got to psychologically be able to take it. So, you put the trade on, you throw 10 contracts on, and it's real easy to go, it's 10 contracts, it's $40, it's 20 contracts, it's only $80. But you lose, and you lose, and you lose again. And by the way, you can get nickel and dimed pretty easily too. So don't let it fool you. But I just want you to see the power of, I mean, that's a massive return. That's like a stock going from $4 to $96 in a matter of 45 minutes. Okay? And this happens every day on binaries. This is why I'm so big on magnet pricing. So I don't know if y'all watched my magnet shows or, checked out the archives where I've covered the magnets. But this is what the magnets are about. They're about going in and getting these massive, $5,000, $10,000 profit trades that, we've done a couple of them on the air. And, I mean, it's really maximizing Nadex. It's not that they're always there. Look, I mean, we're not talking about winning all the time. Okay? But, I mean, if I go in and I do 100 contracts, all the way down the list here, and let's see here, we'll do that. Times -1. I mean, I'm not making this the most efficient spreadsheet. That's still a $10,000 profit, okay? That'd be risking $400 at a time, so you better be able to handle that drawdown. Obviously, hopefully you should if you're making that kind of risk. But I just want you to see the reality of going in, and by the way, the fees don't go up because the fees are capped. Sort of nice, right? So we don't have to even increase our exchange fees because they cap at 10 contracts. It's $9 no matter what. So if I do 100 contracts, it's still just $9. But that shows you the power of, mastering some of those out-of-the-money strategies. I will tell you, it is probably among the hardest to master because of the psychological torture. You're going to go in, you're going to put up $400, you're going to be up $2,000, $3,000, okay? You're going to want to take it off. And what happens if you do? Okay? Not too bad, But, I mean, it can add up. It can, things can change quite a bit. If we go in, we start factoring in, okay, well, what about all of the losses right here? See, now it doesn't work out as pretty. Okay? So, now it's a negative $2,000. Oh, what? But I was up like $3,000 on the trade. Yeah, but, you got to put all the stuff together. So, it does take a lot of work. I'm not going to try to, say, hey, it's really easy. I'm going to say the hardest part is really just going to be psychologically taking the losses on out-of-the-money trades consistently. Because you're looking at your risk-reward, your probability is lower, but your profit's higher. You can lose a lot and still be profitable. And that's one of the funniest questions I get all the time from well, how often are you profitable? I'm like, who cares how often I'm profitable? What matters is how much do I make when it's all said and done, right? So if I'm right 30% of the time, 50% of the time, 80% of the time, it doesn't matter. So I could be right, 9 out of 10 times, but still lose money because I lose $10 when I lose and I make $1 when I win. I could be right 1 out of 10 times and still be profitable because I'm making $10 every time I win and I'm losing $1 every time I lose. So ideally, you get a happy medium there, okay? And that's the idea set of like maybe going in for a few of them. Maybe if you can get 2 or 3, maybe if you can just get a couple of these down to break even, right? So if you could just pull that off. If you just pull off 2 of those, that really does help out with your profit quite a bit. Maybe you get a few of them where you get break-even. So it gets to the strike but doesn't expire in the money. Maybe you get even wiser and a couple of those actually, you don't wait for them to expire. You take them off when it's like at 90 instead of trying to get the full 96. So you make 9,000 instead of letting that thing go back to break-even. Now that really starts increasing your profits. So I just want you to see, the possibilities of what's there. I also want you to recognize the challenge of the psychological difficulty of dealing with a lower probability trade that has a higher profit, and then the need for taking a profit. You may find that you would rather make, let's just say right here, let's put that back at 0. You would rather maybe make, $500 on that many trades and lose 400 on the others, because what's making 500? That's nothing. That's an increase of $6 on the price. Okay, so it's nothing. That's not even a massive move, and that might be your preference. So taking a look back over here at our oil trade, it is really pushing. It is trying. If it can break through, if it can get through this level, and if we get some real volume when it does it, then in that 30-minute period, we should be able to move on down there. Okay? So that's what we're going for right now. I've increased my position size a little bit. We'll see how it all ends up. But let's see. What do we got? Trying to see. Yeah, we got a couple people trying to take profits. I got 76. We can see your orders. So you're not hiding. But anyway, so they're trying to front run and get in and get out before anybody. And the idea there is that if it comes down here, the thing is, if it's going to move, it's going to move. If not, it's not. And it's, are you cutting your profit short? Because if you're going to go down to 76 as a take profit, well, that's a $4 risk trade. And how much less are you making? Is that going to cover your lower probability of being profitable? So, well, hey, a profit's a profit. Well, a profit's a profit till it, till it's not enough to cover your loss. So you want to look at it. You want to make sure you match that probability and profit up together. Make sure you do have some where you take some profits. There'll be some that'll get there. And something I was going over with a trader last night, actually. They actually trade. They're over in New Zealand. They trade on IG. And they have the touch and no touch and the, binaries as well. And the cool thing about those is they're basically showing a probability of touching versus a probability of expiring. And it came from a conversation where I was talking about the pricing. If a contract, if you can go in and sell for $96, or buy it for, so if you sell a contract for $96, that means there is a 4% chance it'll hit your strike, or actually expire in the money, and not hit your strike. There's a higher probability to hit your strike. So I'll talk a little bit more about that when we get back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this rules, and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back to the Diagnostic Trading Hour. So, right during that break, that volume did go ahead and start, it ran right up and it broke right through. And so we saw that big surge on the downside. It's pausing right now. We're still getting some volume. It's trying to push back up, and we'll see if it's able to push back up through this same resistance. What was support now becomes resistance. It's going to come right back up to that, and then turn on back around and go back in the other direction. Let me get a little velocity measurement here. See what we got on that. And didn't measure any velocity, so that's interesting. Okay, so I thought we would have had some on there, but so no velocity, which is actually good, because usually velocity happens right before a reversal. And I don't want it to reverse. I want it to continue. So looking at this right now, looks like it's coming back up to the same, what was resistance. now can become support. Or, well, support now can become resistance. There we go. And so it came right back up to it. We'll see if it sort of like basically just pushes right there, because obviously there was a lot of orders there. That's why that level exists. And what do I mean by that? Look at all of this, okay? We can just go back and back and back. But look what happened last time. It broke through and it fell basically half a deviation, okay? Came back up to the same price level. Bounced off of it, came down, half a deviation. Came back up from half a deviation drop, and was able to move on up. But when it came back down, bounced off of it, bounced on back up, came right back down to the exact same price point. I mean, if you can't see that, you're sort of blind there. Why is that happening? There's a lot of orders in that zone. For whatever reason, there's stop loss. I mean, I can go into the whole, stop loss, take profit, where the stops are, etc. You got your sellers coming in, and they're putting obviously stop losses in. They're trailing down. You got buyers coming in. They're putting stop losses in the other direction, and this comes through. It's going to hit every buyer had at least a stop loss. They had, just makes sense that if you were a buyer at any of this range right here, any part of this trend, like that whole section right there, that's not really even that visible. I'm trying to get something a little more visible for you. Here we go. So like, if you bought in this zone, you probably put a stop at least down here at this point, which is what got stopped right there. Okay, you had a whole bunch of, you were buying, so you had a bunch of sell orders. If you're a breakout trader, you probably had some sell orders below that point. So it's basically what we were looking for, except we hopped in before it. Why would I hop in before it? Because I'm not afraid to, because I'm using Nadex. I have capped risk and a low risk, high profit potential trade setup. And so with the sell orders for the breakout traders, with the stop loss sell orders for the traders who were buying and long, for the traders who sold, maybe up here, and it came down, and it came back up, and then it came down again. Okay, so like they're like, I'm making money. Oh no, I'm not. Oh, now I'm down a little bit. Now I'm down. Oh, thank goodness it came back. Now I'm profitable again. Maybe I'll make a whole bunch. And then it flies down, and they're like, I can't take it. I'm taking my profits. Boom, boom, boom. They take profits. Okay? And that's what pops it back up. And now they're done. And now, as you can see, if we move on back in, we're heading on back down. As we get on down to that 105.50, 105.57 area, if we do, we're going to have a pretty nice trade. All right, y'all have a great day, and I will see you tomorrow on the Diagnostic Trading Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.